Tell me if this isn't true. Your last loan was probably similar to that of getting on a plane. And I think we've all been there before. We're sitting in the seat, we're ready to go. And all of a sudden you hear over the intercom, looks like we're going to have a delayed flight. You start hearing excuses over the intercom and wondering if you're ever going to take off. And guess what? You're not alone on that. Most people that I talk to tell me that their loan process is full of delays, broken promises, and poor communication. But what if you had a clear map of lending and the landscape that could actually save you weeks of stress, hours of chasing answers, and gives you some peace of mind? So if you're climbing and you're trying to figure out which pathway to go, I've been there before. There's a lot of different runoffs, and you probably have 5 different ways to go. One of them is going to get you to your ultimate destination, and that's what we're going to talk about today. In the market of commercial real estate lending, there's 5 major areas that you need to focus on that we're going to unpack today for origination. You have banks, life insurance companies, CMBS, private credit funds, and finally government programs. And knowing which path to go can be the difference between you getting a deal done or not. And we all know what it feels like to not. So let's see if we can have success today. So banks right now have originated over $670 million in 2024. But again, rising regulatory agencies, the pressures that they're on, they're more conservative more than ever right now. Perhaps that'll change as we go into 2026. We'll see. Life insurance companies, they originated about $120 billion last year, focusing almost exclusively on lower leverage top-tier properties. CMBS, after a tough year in 2023, CMBS issuance rebounded $60 billion in 2024, but deals still remain highly structured, adding layers of complexity and time, according to the Commercial Mortgage Alert. Private credit funds, this is really the beauty of them all right now, $1.7 trillion in dry powder, and they're stepping in the gap. They're going to continue to step in the gap, funding transitional and value-added assets with speed and creativity, according to Preqin. Government agencies, so this is Fannie, Freddie, HUD, et cetera, even SBA. The originations were about $140 billion in multifamily loans in 2024, with long-term certainty and attractive rates as we come in out of this foggy recession that we're in, that people want to stay away from that word. So let's look at practical things you can do yourself to map out your capital stack with all these 5 different sources that we look at. The first one is ask for transparency up front. And a reliable partner should outline costs, timeline, contingencies immediately. Use private credit strategically. These lenders thrive in messy deals where banks can possibly stall. Plan for regulatory headwinds. Bank approvers are just going to be slower. Factor that into your acquisition timelines. Leverage agencies for multifamily. They remain the certainty play in a volatile market. Focus on execution. Partners, speed isn't about who's the cheapest, but who is clear, transparent, and reliable. Simplify documentation. Less red tape means fewer surprises and faster closings for you. Take the time to get your house in order. Look, the capital markets, they feel chaotic right now. Let's just be honest. But the truth is clarity equals confidence. When you understand the players, set the right expectations, and choose a responsive partner, you'll not only close faster, but gain the freedom to focus on what really matters: growth, stability, and peace of mind.